Okay, I messed up, I admit it, and here's how. Okay, let's look at the trade on Monday. So this is my favorite strategy, London breakout strategy, and on the left here we've got the chart, the pound against US dollar. And what you do is you highlight the highs and lows of the Asian session, which is this grayed out box here. It's a 5-minute candlestick chart, pound against US dollar. Very simple strategy. You trade long when it goes out the top, and you go short when it goes out the bottom of the box. Okay, 5-minute candlestick charts, as I say, and you wait for a full candlestick to go there. So this is what I did. So I went long here, which is fine. Everything's going okay on the trade. It goes up, comes down, it goes up to here. Now this is at 2:05 p.m. Now what I've done is I've set the trade to get a potentially 20 pips. So I've got a limit trade of 20 pips and I'm risking 15 pips. That's 1.5 return. And it's a trading stop. So if it goes in my favor, the trade, then I reduce my risks. Now, once I get up to here, I've got potentially at £12 a pip, £150. But I get fearful. And this is why they say the market's made up of greed and fear. I got fearful because, you know, normally I'd be more than satisfied with £150. Also, because it was going up and down, I was getting a bit fearful. Another thing, I was due to drive to work at 2:05 p.m. and I knew I wouldn't better keep an eye on it. Not that you should be watching these trades anyway, but I definitely couldn't keep an eye on it if I was driving. And also another 25 minutes, you know, the American session was going to open and anything could happen. So I just didn't want to, you know, I didn't want to lose £150, so I didn't trust the system. But then look what happens, it goes all the way up, potentially another 27 pips. Now the funny thing is, you know, people concentrate on the pound against the US dollar for the London breakout. But you know, some traders will trade the FTSE 100 for the London breakout and also the Euro US as well. And I have traded the Euro US before on a London breakout strategy. But I tend to have this bias for the pound US. It gets, you know, all the highlights, all the glory. And it just, and for me as well, I just think that as more potential for a breakout, it tends to move more than the Euro US. But this is where you can be so wrong. Because if I had traded here on the right here, if I traded the Euro US, you see, and I'd gone in there and that is at 8.45, by 10.25 I'd have got my 20 pips. So instead of focusing just on the, and I don't, look, this is how I operate on the breakout strategy. I have two charts open, the pound in US and Euro US. What I tend to do is if they both go out the box at the same time, then I trade one or the other. So if they're pretty close and one slightly breaks out the box first, I'll trade that. But I want them both moving in the same direction. But this is the thing about the pound US and the Euro US. They're what's known as the correlated pairs. Okay, so they move in the same direction, but not necessarily at the same speed at the same time, which I've found out to my cost. So if we go back to the pound US, we move it across, okay, and we get onto Tuesday. Okay, now Tuesday was very interesting because normally I'd focus on the pound in US, but because of what happened on the previous trade, and this is called recency bias, I decided to concentrate on the Euro US. And I missed a bullet here because, look, if I'd gone long here, remember I'm not trading on the wick, I wait for the full candlestick, gone long there, look, it comes all the way back down again. And this arrow here is when it does break out on the low side, about 12.45, which is too late by then anyway. But this is what I want to show you because I actually traded the Euro US. And look, this is the same day. And this is at 8.10 I went in at when the candlestick's gone short there. You look at 8.10 here, that's 8.15, 8.10, it's still within inside the box. And in fact, it changed the direction, it's going back up again. So what am I to think? Normally I would think, well, okay, this, and I've had this happen before, this is going to rebound back up again. Because I always think of the pound US as the dominant pair, and the Euro US is not necessarily as accurate as the pound in US. So I would have waited for this to come back down again, but I've had a long time to wait, because I had to wait to what, 12.50, and by then, you know, you're not going to be trading the London breakout. So I went here, and it did come back up again, but then look, it went all the way down again, and I got my 20 pips here. And okay, I could have got more, but you can never get the whole of the trade. And it did come back up again. You know, some traders will aim for 30 pips or just let it run. But you see, it did come back up again. It could have gone all the way back up. So this is the other side of the market now, greed. I didn't want to be greedy. 20 pips. Those 20 pips are £12 a pip. That's £240. With my £150 from the previous day, that's nearly £400. So £390, nearly £400. And that's good on two trades. And you could say, okay, but you lost the £90 on yesterday's trade. In fact, even more if I'd gone for the euro US. But you can't think like that, okay? Because I'd closed the trades off, or I hadn't even started the trade, whatever. Because nowadays we can trade so quickly in and out with trades with just a click of a mouse. As you go way back in the old days, it was telegrams and then the phone. It's a much more laborious process. Because we can trade it so quickly nowadays, we shouldn't take it for granted. And you look on the positive side. This is such a simple system. Anybody can operate this system. What's the difficult part is choosing whether to go for the pound US, the euro US, how much profit you want to go for, what stop you want to put. Do you put a trailing stop in? Do you, when you miss out on a profit like that, do you let it mess with your mind of what could have been? Do you think, oh, I could have got more out of the market? Do you try and go for too much and then get greedy? Do you let it, sort of stick with you all day in your mind that, oh, I could have got more? Or do you look at the positive side and think, well, I didn't make any losses, because those are only potential profits. You weren't in the trade. And as I say, if you've gone back to the old days where you had to do it at telegram or ring up on the phone, and that'd be a much laborious process. And your mindset would be different. But because you can do so quickly here, you don't think necessarily about the consequences or about the thought process behind it. You just click the button, and that's it. But you wouldn't necessarily have been in that trade if you had to do it longhand, shall we say. But because you can do it click of the mouse, you think, oh, I should just click the mouse on that one instead of that one. But you've got to take the positives from this. And I take the positives from this. It's £400 almost from 2 trades. And I missed a bullet with that. So it's very much a positive. But I also learned something as well, that even though they're correlated pairs, they can move slightly differently. I shouldn't have a bias for one pair or the other. And I should trust the system and not be so fearful. But in the day, it's not too bad. £400 for 2 trades. And I've got many more videos like this which show the London breakout strategy and how to set trailing stops and that. And as I say, it's a very simple system. It's just more about your mindset. That comes with experience. But as I say, I've got many more videos showing you how to use this system. So you can take a look at those. And if you're interested in more videos like this, then please subscribe to my channel, The Running Trader. And I'll see you soon. Thanks very much.